For the past decade, it feels like investors have been locked in this one fierce debate. What's the best asset to own? Is it gold, the dollar, or crypto? Well, everyone's got an opinion. But today, we're going to let the numbers do all the talking.
For 10 years straight, this has been the question. It's dominated the conversation. You've seen all the headlines. You've heard all the arguments. Today, we're going to let the data settle it.
Okay, let's just dive right into it. We're cutting through all the noise, right? All the hype, all the fear. We're going to focus purely on the hard performance data from 2014 all the way through to 2024 to find out what really happened. So, first up, let's just look at the raw truth. We're starting with the pure, unadulterated performance numbers. No commentary, no spin, just the facts. So our whole analysis is framed within this very specific 10-year window. Think of 2014 as the starting line and, 2024 as the finish line. A lot can happen in a decade. Let's see who actually won the race.
First, let's set our baseline, the US dollar. Now, if you measure it by the DXY index, it grew 32% over the decade. It's stable, it's reliable, and it's definitely the slow and steady tortoise in this race.
Next up, we've got gold, with a 92% increase. Now that's a performance that's nearly 3 times what the dollar did. It really shows off its historic role as a store of value that, easily outpaced just holding cash. And then there's Bitcoin, a staggering 9,900% growth. And no, that is not a typo. The contrast here is so stark, it almost feels unreal. We're talking explosive, generational growth, but as we're going to see, it came with a very, very wild ride.
Looking at the annualized returns really puts it all into perspective. The dollar, it gave you about 2.8%, gold, a very respectable 6.7%, and Bitcoin, it was just in a completely different league at roughly 85% per year. The numbers really do speak for themselves here.
This quote just perfectly captures the story the data is telling us. Gold acted like a shield for the wealth you already had. The dollar, it gave you stability for your day-to-day life. And crypto, that was a high-risk, high-reward bet on what's still to come.
But wait a minute, those raw numbers, they don't tell the whole story. Now we have to bring in the silent killer of wealth, inflation. This is that hidden force that totally changes the real value of all those returns.
I mean, look at this slide. It really makes the impact of inflation crystal clear. With cumulative inflation over 30% this decade, that $100 you saved back in 2014, it now has the buying power of about $70. You lost almost a third of its value just by holding on to it.
And this right here is the crucial point. If you were just a saver, just holding cash, you got punished. Your wealth was just silently eaten away. But if you were an owner of assets like gold or stocks or crypto, you were rewarded because your assets grew way faster than your money lost value.
So crypto was the clear winner, right? Well, not so fast. We've got to look at the other side of that coin. We need to talk about the volatility trap, the immense price you had to pay to get that kind of explosive growth. Okay, first, let's just visually lock in the reward. This bar chart makes it so clear. Bitcoin's average annual return of around 85%, it just towers over everything else. I mean, the potential upside was mathematically undeniable. But here's the reality check. Look at the volatility. If we measure it by standard deviation, Bitcoin's was a massive 80%. Now compare that to gold at 10% and the dollar at a tiny 5%. What this means is that crypto investors had to stomach terrifying drops and just gut-wrenching swings to get those returns. So here's the thing. You can't just pick one horse and hope for the best. This isn't about being a gold bug or a crypto bro. Smart investors, they understand that different assets play different roles on the team. They don't marry one asset, they manage a whole team. And that leads us to the solution, right? If no single asset is perfect, the answer isn't to pick one, it's to combine them. So let's take a look at the power of that combination. And here it is. This is kind of the aha moment. A back-tested model portfolio from this decade shows a potential solution. It's not about going all in on one thing. The core idea is a balanced mix, a solid base in broad market stocks, a chunk in gold for safety, some crypto for that high-octane growth, and a little bit of cash, ready for any opportunity. And the result of this mix? A really powerful, consistent 17% average annual return. That's a fantastic return that grabbed a good chunk of crypto's upside while the gold and stocks smoothed out that terrifying volatility.
It works because these assets, they often move independently. When one zigs, another zags, and that provides this great stabilizing effect on the whole portfolio.
So the lesson here is simple, but it's also really profound. Being stubbornly convinced that your one single asset was the best, well, that was a losing strategy. The winning strategy was diversification. It allowed you to benefit from all these different trends without getting destroyed by a single failure.
But, owning the right mix of assets is only half the battle. There's another asset, one that you can't see on a chart, that was arguably the most important one of all.
Let's not forget how hard it was just to stay in the game. Do you remember the 2018 crypto winter when prices collapsed over 80%? What about the COVID crash in 2020? The inflation shock of 22? Every single one of those felt like the end of the world. And that's where the data meets human psychology, and where biases like panic selling scream at you to just get out.
And that brings us to the ultimate moral of our data story. The greatest asset you could have owned over the last decade wasn't physical gold or some digital code. It was the discipline and the patience to stick to your plan, even when it was absolutely terrifying.
So the past 10 years have given us a masterclass. Gold taught us all about safety, the dollar taught us about stability, and crypto taught us about acceleration. The only question left is, with all these lessons learned, how are you going to prepare for the decade to come?